Oh, shoot. I forgot to test out my speaker. We'll do it here in a minute. What's up, everybody? It's a Saturday, and I am live. I figure we get on here and talk about the stock market. See what you want to talk about. See what I want to talk about. I don't want to talk about much. I did a lot in my video yesterday. Go check that out. Hey, subscribe, hit the bell. Check me out. I'm on here almost every day. And figure we talk about the major indices for the most part and concentrate a little bit on the VIX. Okay, so I'm kind of looking at my other screen here because I guess I gotta refresh this because I'm trying to share it out. You know how it go. You know how it go. All right, there I am right there. Got to check out my speaker, by the way, as well. And I am live, and if you want to join in, you could click the link. Yeah, there we goes. Yeah, you can click the link. The link is in the description. By the way, there it is. Wow, I got it loud. And where is it? Copy. Let's put it right here. I can't see shit. All right. So let's go ahead and get started. I think I got that done. Waiting for it to post. I guess that's the post. All right, cool deal. Looks like I'm good to go. All right, so I figure we get on here, talk about the market, talk about it being overvalued. You see that little clip I posted on my channel about the Tesla being overvalued. And I know people say, well, it's not a car company like Cashmatic did. Hey, babes, Jewelry Box in the house. Who knows what it is, to be honest with you, but it is what it is as far as how much money they bring in and, income, basically balance sheet. The balance sheet is what it is. So everything else is just expectations. Everything else is just dreaming on, and it's got a valuation to that dream. And the dream is almost worth $1 trillion. So the vision is almost worth $1 trillion and worth more than every single car company in the world combined. It's just unbelievable. So yeah, go check out that video. And I got that video from what is it? I can't. It's in the description of that video. But go subscribe to that channel as well. So let's hit. This is it. We talked about this. This was Friday's action. And if you look at the heat map, all green, text. And one thing, but let's go. All right, let's I'm kind of all over the place. All right, let's start with the overall market. Let's start with the Qs, because these days the Qs are the market, even though Qs has a nice chart, and that's the weekly. By the way, we finished up on a nice weekly candle. That's beautiful. We really broke out on the Qs. It's a breakout, so you can see the consolidation right there. And then nice candle close on, for the most part, on the highs of the week. And when we look at that daily on the FinViz, the intraday, you can see how NASDAQ, there it is, almost closed at new high. We going into earnings this week as far as the big FANGs, right? FANGs getting ready to report. I think, I don't know what's going to happen. One of my favorite charts is Apple, right? I like Apple a lot. I could bring that up. But the market just seems to be weak. And I think once FANG reports, you can see how Apple's right at the top of the range here. And I think once FANG reports, once it gets it out the way, that's generally when sell-offs start. So I don't know. I'm kind of, part of me wants to anticipate a sell-off just because, why? Just because I just think we're overvalued. When you look at the monthly, and I'm going to pull up the monthly right here. Here's the S&P. It's crazy. See how it's just blown out of the channel. We're just going to start a new channel. So this wedge that I got from 2014 till current means absolutely nothing. Let's just go ahead and delete that because it means nothing now. Yeah, delete all that. And let's just try to find some new stuff to draw, because that's basically what you got to do, so I can draw that. And for the most part, we in range. So here's the new channel, right? A crazy ascending to the moon type channel. It's just right. So that's the new channel. Here's the old channel. Draw it like that. We'll say that's an overextension. And just to get back on trend, I'm making money. Hopefully we all making money. But just to get back on trend, from here down to there is a 28% decline. And if it were to do that, the market is just fine. Isn't that unbelievable? Because a bear market starts at 20% and it could go to 28%, which will damn near, depending on how fast it'll get there, could be considered a crash. But we would really be on trend. You know what I mean? And it would actually be healthy for the market, even though a lot of people would be losing. So how long is this sustainable? I don't know. And that's the new channel I drew, right? How long is that sustainable? So I was thinking, what got us here? And this is what brings me back to Tesla and that video, because Tesla is the one that's really been on fire. There it is, straight up, just unbelievable. And if you look at that video, yeah, we talk, it's all about the dream, because the actual numbers are not there. They're not there. And I was thinking, so Tesla reports this week, right? And suppose it's bad. Just suppose it's just stuff that people don't want to hear for a stock that's basically worth $800 billion. Damn near. Should be right around 800 billion. And it sells off, and it just starts selling off hard. And it, of course, it's a big part of the S&P 500 now, right? You come over here, look at the heat map, and there's Tesla's got a nice big old square, so part of the S&P 500. So maybe that starts to bring the whole market down. I'm just throwing scenarios out there. This kind of brought us up to unbelievable heights, kind of like the SPY. How about the IWM, right? An index of 2,000 stocks going straight up to the moon. Even though it was just last week, just last Thursday, it was announced damn near 1 million people went to the unemployment line. So I don't know, man. Part of me believes it. Part of me, I think we're in a new era. It's a new era of just newness. Basically, we all trying to make sense of it, right? We're just trying to make sense of, but yeah. So you see it go straight up. We know this doesn't happen, especially with indexes, but we try to find a way. Well, yeah, it's the new era, it's the new technology revolution and blah, blah, blah. You name it, whatever. EVs, yeah, EVs, It's funny because all these EVs coming out, but the whole EV wave, but still, we still got to buy the car. I mean, these cars are expensive. I don't know anybody with a Tesla. I don't know. I know they're not that expensive though, but I don't know anybody with one. I mean, are we just all going to be buying cars like that? I'm just thinking about the whole thing. So let's say that all the dealers have these EVs on a lot. Are we all just going to run and be buying these things? I don't know. I'm just trying to think of something, just like we're trying to justify it going up, So let's look at what I want to look at, the VIX. All right. By the way, if y'all want to talk about a stock, go ahead and throw it in there. I'm just going off the top of the dome thinking about shit, figure I'd get on here live and shoot it up with you guys. So if you got something to talk about, we can go specifically talk about it. I was going to talk about credit spreads, right? I was going to bring up my simulator. With good thing about Thinkorswim, you can go back to any date you want. You click this on demand right here, and you could set the date of anywhere, and it starts trading like it's the normal day. But I tried to set it. It didn't work. Gives you fake money, and it just didn't work. So I'm like, I want to do some like fake live credit spreads and kind of talk about some stuff. And I was like, yeah, maybe just talk about the market. But I do want to talk about credit spreads. I want to talk about Walmart and specifically because I think that one is being a cash machine and just how you could just make free money. Anyway, so the VIX. I got lines all over the place. Let me go ahead and delete this and go ahead and get you on the big screen. Some people this is what's throwing me for a curveball because I know the market's just at extreme heights, but at the same time, so is the VIX. I mean, the VIX being over 20 this long, the VIX for the most part been over 20 the whole year. When have you seen a? Hold on a minute. Hold on. Damn. When have you seen a gap like that? See that right there on the bottom? This little square. Let's see if I can draw that out. Right? That's below 20. And look, it's never like that. Here's the 20 line. Here, I guess, here in 2008. Okay, that was just okay, I guess that was just about a year right there where we kind of hung out below 20. But you see what happened when the market was coming back, it hung out there and then it dropped down way down here, 2009, around 16. So if we go to the SPX or the SPY, did I say 2016? Hold on a minute. 2009. Sorry about that. 2009, right around October 2009. So if we go to SPY, and where's 2009? You can see right here, this right here is where the VIX dropped below 20, right? And then you can see what happens. We're going up, right? So the VIX was elevated here, and you can see we're rocketing off the bottom, and then here it drops below 20, and we still go up. We get a little pullback right here, and this is April. So maybe that'll happen this year. Maybe it'll be April, and that's 15%, about 15, 16%. And then, of course, that was buyable because then we go up another 35%. So basically, what I'm getting at is when you look at the VIX and we still elevated, even though we know we're going straight to the moon, we didn't break 20 yet. And breaking 20 is good for another 15%. Right? It's good for some more running. So that's what makes me think we still got more to run, even though it's like sounds insane. So maybe that does bring us into April, just like 2009, right? So April would be right here. I'm gonna draw a circle right here. Make it a little long. That's April. So maybe we kind of drop down or stay up, start dropping down in April, and that's the correction, or go up, down, or whatever. So, right, just something to think about. I'm just trying to call something, So what do you guys think? With the VIX is the fear index, right? The VIX is basically saying it's kind of measuring how many puts are out there, how many puts are being bought, right? How many puts are bought for the most part. And it's got its little formula. I don't know exactly how the math is done. And that kind of measures the volatility. So when VIX is sitting at 2191, which is basically 22, there's a lot of people out there sitting on some puts that are afraid. They're waiting for the market to go down, but the market's not going down. So if it continues to goes up, they're going to be losing money. They capitulate, and therefore maybe the VIX drops below 20. And then remember, the market likes to catch everybody off guard. So therefore, when it is down here at the 15, 16, that's when it goes up. So if we go here again to the SPY, and let's go back to 2009. All right. So let's look at 2009. Which is, where's that correct? Right here. Here's April. So we basically, May, actually it was May. Okay, so May, we go down, we start that 15% decline. May, take that back. This is May 2010. So let's go to the VIX and look at May 2010. May 2010, and you see how we broke 20. We broke 20 just before May. So I'm thinking maybe we break 20 anywhere between now and May, which is 3 months, right? It's the end of January, February, March, April, and then May we get a spike up to 50 or something like that. So and remember, it's also it's time to sell. That's it. Generally, the season is with it selling. Selling May, go away. Remember that phrase? So That's what I'm thinking. Just by looking at history, we above 20, just like over here. We break it going into May. We spike right at the beginning of May. And then, of course, when that spike happens, you got to be buying it. You got to be buying it. And then it'll be all good according to this chart for another year, right? So I do think the sell-off is coming, just don't know when. I know a lot of people's worried about it, but I always say if it's going to be now, January, it's always going to be after the FANG. It'll stay elevated as FANG comes in because, you know, they move the market. I mean, it is the market. See, this is the heat map, right? And if you don't know how the heat map works, the larger the square, the bigger the stock, the bigger the market cap. So you can look at Apple's got the biggest square on the board. It's the largest company in the world, biggest market cap. Next square, looking at it, it's between Amazon and Microsoft. I can't tell. Maybe it's Amazon, but Microsoft is a close third or vice versa, right? And then the next one's Google. Then the next one's Facebook. Right. Then the next one looks like it's Tesla, and then maybe Walmart, and then Johnson Johnson, then Home Depot. Maybe don't. Oh, wait a minute. I'm missing Visa. Visa's pretty damn big. But you see how it goes, right? And then, of course, here's the bright green. If it's bright green, it's up 3%, kind of regular green up 2%, a dull green up 1%. And then, you know, the brighter red, the more losses. So it's a good way to look at the market and just kind of, and this is why I bring it up every day. It's just like you can glance at it and be like, oh, finance is down because they see it's all red except for PayPal, right? You know that fintech is fire. Fire on the fintech, man. And it's like, it just seems like when something gets hot, it just wants to run. What's that fintech ETF? I guess we can use ARK's. ARK's got a fintech ETF, ARK-F. And straight up, well, not straight up, but this is, you know, if you don't want to get into the Square, the PayPal, and whatever the hell else is out there, ARK-F is for you, and you're playing it. You know what I mean? So there it is. Fire. All her ETFs fire. Unbelievable. Called all the trends. Anyway, I got some comments in here, man. Vicky Sue, how do I get invested with me? I'm just a YouTuber. You don't invest with me. You invest with your broker and just do your thing, you know? And I sit here and I talk about stocks, whatever. So subscribe, hit the bell, and you know, if you have a question about a stock, we can look at the chart. That's what I do. I don't really look at the fundamentals. I just kind of look at the chart, say, I think it's going up. I think it's going down, you know, that kind of thing. What's up, Rags? What's up, Rags Richards? Appreciate you in here. I got my usual up in here, Chopper. Hey, Dre, what do you think about GME? GameStop. Oh, man, GameStop's going to zero, in my opinion. We'll look at it real quick. Francisco. What's up? What's up, friend? Hey, thanks for coming in, man. I don't think I said your name before. You said I'm long calls GME. Yeah, I think it's going to zero, but I don't know how high it's going to go before it goes to zero. All right, so let's go ahead and pull that up real quick, GME. And of course, there was some news that broke. I should have looked it up. That got GameStop just the short squeeze of the lifetime. Oh, man, looks like it got some life way back in August. You can see that volume starting to come in, man. That would have been a good time to pick up calls. This is when we thought we had sight of the vaccine coming and, you know, the whole reopening trade starting to become alive, just like all the other stocks. But here's the thing, man. You know, I go in GameStop, they rip off the kids, sell their shit at 3 times the price they gave it to them, whatever. But anyway, I mean, all these games, you download them now. I mean, so they basically they can't rip off the kids no more. The kids don't have games, right? Because they download all the games. And then most of the games are even, you download it. You know what I mean? So to me, that is their whole business. This is why people shorted the shit out of them. Because it regardless if it's a recession, or what's the word? What's that word? Pandemic. Regardless if there's a pandemic or not, it's got to go to zero. Everything is being downloaded, and they have nothing to buy. You can't buy NBA 21K NBA for $3 off a kid and sell it for 25 anymore. Right? Because you're just gonna download it, So I don't see it. So short squeeze, and I think basically it goes to zero. Come on, man. My girlfriend has a son loves game. Used to, they didn't talk GameStop. The word GameStop don't even come out of his mouth no more. So I don't know. What are your kids doing? So anyway, I think eventually it goes to zero unless they figure out a way to get downloads. I don't know. I don't know. I mean, I used to go in there to try to pick up when they have the buy 5 for $25, get some old games just so I can play, give me something different to play. But they used to get those old games from the kids. And if everything's being downloaded, where are you going to get the old games from? You see what I'm saying? So I don't know. I don't know how they can make it, especially with the stores. I mean, I see some GameStops and they like the only store. They're being a strip mall. And then half the strip malls even closed now. And it's like GameStop and maybe a Sally Beauty or something like that. So that's my thoughts on it without not knowing any fundamentals whatsoever. There's no way I could put my money behind that. It's not a business that's going to be making money and changing unless they're doing something I don't know, right? Maybe we could pull up the news real quick. Let's see. Short squeeze sends GameStop shares to 2007 level. What happens? I'm not going to, I can click on Barron's. GameStop shares trading. GameStop surging again, putting it on track. Back to resume. The circuit breakers triggered on that thing. Increasing volume. Wow. Andrew Shintron, Andrew left that short seller. I think he's on the other side of the trade, and I think he's losing a lot of money on it. Consumer still. Here's why I'm trying to figure out. Should I click this story? Almost kind of why is it moving? 1 sentence question. Here's what shares of GameStop is moving. Trading high as the stock continues to gain momentum amid strong retail investor interest. So the retail investors started buying it up, meaning like the Robin Hooders. It's going up for no reason. Where's that Barron's story? I should have clicked on the Barron's story. No news to justify. Not seeing in news to justify move. Charts look similar. GameStop chart. It's just going up. The Robin Hooders hit it, I guess. Can y'all tell me in the comments? Because I don't know. I can't find it. So I don't know how many shares are short. I don't know how my FinViz here. I don't know how up to date it is with the short shares, but it's saying the short. Dag, it's even gone. There's nothing in there. Right? It's blank. That's weird. If you can look close, right? There's nothing there. But it says shares flow. There's 50 million. Okay. We can look at, there's no ratio, but there's 50 million shares short, but there's only 65 million shares out there. And that's like damn near all of them, so wow. It's just a hell of a short squeeze. And I feel that once it starts going down, you could probably ride it down, ride it down to zero again. Let me see something. The puts are probably super expensive. Man, you might be able to come out here and buy look at the January 7th put for $1.85 2 years from now. Let's get closer to the year. Wow. Maybe buy this 10 for 166, so you can get in here and play. These puts are expensive. So it's always dangerous trying to play this. You can buy a spread, maybe buy the 35 and sell the, let's see. I don't know. Let's sell the 20. 15 point wide will cost you $8. So you could double your money for the most part. Because how you calculate that without pulling out my little graph, it's 15 points wide. So that's 15 points. You got to add 2 zeros here. You got times about 100. Anything with options is done 100. So it's $1,500, and it's going to cost you $800.23, $823 to buy that. So you can make $677 if you were to buy that, if it were to drop below 20 within the next before November. So that's a good way to play it. But yeah, so we just got to watch it and just a short squeeze. You know, everybody and his mother was short the stock, and you can see the volume coming here. And this is when that, for the most part, when the reopening trade, the Robin Hooders don't know any better, I guess. You know, that's what they say. You know, but we blew. When I say Robin Hooders, I mean all of us retail traders. We blew the doors off of these guys. I was up 330% last year. You know, so they're coming in, scooping up those cheap shares for the reopening trade, and for some reason, boom, you know, short squeeze. I'm sitting here drinking my blue water, Hawaiian Punch. He said there's a lot of big names behind the bullish set. I don't know. I don't know all the detail. I haven't been following at all. I've just been doing some quick research right here. But that doesn't mean nothing. You know, how's the business? You know what I mean? So maybe the big names, maybe they started the short squeeze to make some money. Like they know it's a heavily shorted stock and they just start buying the shit out of it. You know what I mean? And cause the short squeeze. And it's big money. That the stock was so low, you could move it. You know, so could have been something like that. People with this money. Anyway, I think Michael Burry is bullish. That name sounds familiar. Oh, that's the isn't that the big short guy? And then you said I don't understand the short squeeze concept. How do you interpret the data? Okay, I guess I'll explain it. All right, so when you look at a stock, you know, stocks have certain amount of shares available. All right. So we can go back to the FinViz. Here it says GameStop has, all right, for the whole stock, there's 65 million shares available. There's of GameStop, period. Okay, that's a finite number. There's float, meaning there's only 50 million. The float is how many shares are traded every day for the most part. So there's 50 million shares out there. The other 15 is with the owner or the managers or whatever. They're locked up for the most part. People own them and they're not traded. They're not available for trade. Okay, so there's 50 million shares available for trade. So people that bet the stock is going down, they have to borrow the shares to sell. Okay, so you go to your broker, you say, yeah, I want to short, I don't know, 1,000 shares of GameStop. So to short it, you have to borrow it. You have to borrow it from your broker, and the broker gets it from somebody that has it in their account, and then you can sell it in the open market. Okay, so you sell it, you owe your broker 1,000 shares. Now to close that position, you have to buy the shares back. Okay, you have to buy it back. So if you sell it at 20 and the stock go to close it out, if it starts going to 30 and 40 and 50, you have to buy it back to close your position. See, your intent was to sell it at 20 and hopefully the shares continue to drop. And let's say it drops to $5. Then you buy the shares back at $5 and then you give your broker back that 1,000 shares, right? It's a borrow. So when it's at $20 and you sell 1,000 shares by borrowing those 1,000 shares from your broker, and next thing you know, the stock starts going to 30, starts going to 40, starts going to 50. Remember, you owe your broker 1,000 shares. You're losing money. So therefore, you're like, oh man, it's $50. Max pain. So you go ahead and buy those shares back at $50, and then you give your broker back the shares. And that's basically selling short. I don't like selling short. When you short stock, you have unlimited amount of losses, basically. See, when you buy a stock, if you were to buy GameStop and it's $10, so you buy 100 shares at $10 for, would that be $1,000? And if it goes to zero, the most you lost is $1,000, right? You can't go to negative, zero. You lost $1,000. If you short a stock at $10, right, it'll cost you $100, right? You'll get $100 by selling that share, $1,000, sorry, by selling those 100 shares on the market And then for say somebody buys GameStop for a whole shitload of money, and now it's $100 a share. Now you have to buy that $100. You have to buy those shares back. That it will cost you $10,000. You know what I mean? To buy those shares back. So let's say they bought it for $1,000 a share. It goes up. It can go to infinity to the upside. So that's why I don't like to short. Now, if you buy a put, it's safer because you only can lose as much as you buy. Puts are an option that you buy hoping the stocks go down, but the most you could lose is the price of the put. So if you buy just 35 strike price put for, here's the bid, here's the ask. Let's say you buy for the ask, 15, let's just call it $1,500 for easy math, right? So you're basically saying, I always get this confused. You're basically saying, you want the shares put to you at 35. Basically, you want to sell the shares at 35. You're gonna let somebody, you're gonna be able to sell the shares at $35. So the shares go to $10. You have a contract to sell those same shares for $35, and to do that option is going to cost you $1,500. So basically, if you sell it for $35, it still costs you $1,500. So basically, your break even is 20, right? So, but the most you can lose is $1,500. So if it doesn't happen, if it trades above this strike price beyond November 19th, this is when it expires, 21st. The most you could lose is $1,500. But if you short the stock, the most you could lose is infinity. It just lose as much as whatever. I hope I explained that right. You know, I'm not even good at explaining puts and things like, because I never even buy puts. I'm always in the calls and I sell puts. When I buy a stock, I like selling the put, right? Selling the put so you can have the stock put to you. See, that's how I always think. So it's put to you at the strike price, right? So if I were to sell this 40 put, say the stock's trading at 65, I could sell this 40 put and collect, say $1,600 right now. And if the stock never reaches this price, I still collect the $1,600 and walk away. But if it does reach this price, I have to buy the stock at $40 a share. But I still got the $1,600. So therefore, it really only cost me $26. Does that make any sense? 24. Let me see. 30. I think I did the math wrong. Basically in the 20s. Okay, I think I did the math wrong. $25 for roughly. You know, because you get to keep that money regardless. You know, so I like the options. When I want to short something, I want to buy. I want to buy this. Here's the market makers move when the stock opens. This is what this is right here. Market makers move $18. So right now the stock is trading at $65. So they're basically saying if this number is correct for Monday, I don't know if it's Friday's number, it's going to be the new Monday's number. This stock is going to move $18 up or down. Plus, see, it says plus or minus $18.58. So they're thinking it's going to move 65 plus or minus $18. This is a big range. My bet is to the downside, but we'll see. We'll see what's up. You think he sold a couple hundred contracts of those 60s? Maybe. I mean, that's the way to do it if he wants to go long, but I don't know. That's high. That means he wants the stock. He wants to buy it at 60. I mean, because if you look at GameStop before, let's look at before the what was it called? The pandemic. Let's say the end of the year, the best time at the end of the year was trading at $7. So why would he want to buy it at 60? So I almost got to say that's false, unless it's some kind of quick trade he's trying to do. It's got to be a quick trade or something that he's trying to do that we don't understand. You know what I mean? So, yeah, I mean, stock ain't worth nothing. It's garbage, you know. That's my opinion on GameStop. I say get the popcorn and just watch the action. There's a lot of people getting rich in here and a lot of people losing their ass off when you see these kind of moves. Right? So just watch the action, you know? That's what I do. You said no, the guy lost $760 for selling those calls. Oh, he sold the calls to those six. Oh man. Well, if they didn't expire yet, he can still hold on to them. Hopefully it drops below 60. Whew. Damn. Wow. Yeah, yeah. I could see it because when it first spiked, and I can see what he was maybe doing. Let's go to the 4-hour. Now that's even too fast. Let's go to the hour. You can see it trading up, right? It's up here, and see how it's trading at 40 and it leveled off. It was kind of doing its 40 thing. And he probably's like, yeah, I'm going to sell these 60s because the premium is pumped up when it's down here, right? So he's like, let me sell these 60s thinking that it will never get there. And it's like free money because it's got to go back to zero. Because look, it leveled off, right? He just did it too early and he sold them and boom, got crushed. But you never know. Let's see what happens. It could come straight down, you know, or is it going to go sideways again and crush? I mean, this could go up forever just by people being short, you know, trying to cover their ass and people trying to make money on the up, you know, just can kind of keep going up. Just remember there was a stock called Dry Ships. And Dry Ships was a hot stock in the dry tanker days when all these stocks were hot. But then they all crashed. They all came down to nothing for a while. Anyway, there was nothing for years. But then somehow Dry Ships caught a bid. I don't think is it even going to come up. Dry Ships caught a bid, and then it went up to the 100. I think this is the spike right here. Is that it? No. See how it's 14? Look at the price of that. I think that's when it really spiked. And then it came down. There was a spike in here. I don't think it's showing. I don't think it's showing. I think that's when all the dry companies, the dry bulk companies were spiking. Then down, then maybe this is the spike. But anyway, for some reason it spiked. It did the same exact thing. There was nothing going on with Dry Ships. And it went from 0 to 200. I think I went from 2 to 220 or something like that. It was insane. Insane. And then it went back down to 0. So I could picture people trying to sell those calls, trying to make that money because the calls are pumped. Like back to GameStop. You can look at, say, this March, 55 days out, right? And you can come here and sell this 75 call for, shoot, you could probably get $2,000 for that. Sell it for $20 a share. Is it going to go to 75? It did already, but that's almost like free money if it happens. But if it don't, and it goes, you wake up and it's trading at 110, you're going to get your shirt ripped off, you know? So your head served on a platter. Oh, they liquidated. Okay. Yeah. I guess the broker did that for him. So he couldn't hold it and see. The broker doesn't want to take any chances because for the most part it's theirs. They the ones that got the final risk, you know what I mean? They will liquidate your account. Maybe he got a margin call, didn't pay, I don't know, but they got to control the risk of basically everybody. But no, Chopper, I didn't read about any of these stories. I just knew the stock was going up like crazy, you know. But I do think I know it's just a short squeeze, and it'll go back down to 0 or wherever it was, 6, 5. All right, so you guys don't so that's why exactly. Because some of the penny stocks will be real. You know, most penny stocks are fake, okay? But some of them wind up being real. They got real shit going on. You really got to know what you're doing with penny stocks, especially if you're shorting it. Yeah, this stuff happens in pennies all day. That's why I don't like pennies, because they are manipulated every single which way. And you could be shorting it. You could say, and you be shorting a lot of it, right? You'd be like, man, this 20-cent stock, I'm going to short, and you be sounding like a baller. Let me short 50,000 shares of such and such company. And then you're just trying to catch like 2 pennies of a move. And then boom, stocks halted for news pending. Right. And you're like, and you're short. You were just trying to catch 2 cents or something. The next thing you know, it opens up $1.50, $2. You're like, crazy loss. Right. And that situation right there, that's over $1. You short of 50,000, you'd be over $50,000 loss. And you was just trying to catch a couple of hundred, for a hold in those shorts, trying to make it move. And then boom, news pending, shares halted. Yeah, it's risky game. That happens all the time, damn near every day. When you hear a penny stock being halted and then it opens up and it's up $2, somebody lost their ass, So, playing short. So I always like being on the long side. When you're on the long side, the most you can lose is what you owe, unless you do it on margin. But even then, it's going to be limited. So, the most you could lose is what you owe. But if you're short, you could lose to infinity. For the most part. I mean, it's not really infinity because the stocks, but for the most part, there's no real cap on it because somebody wants to buy the company for $1 million a share. I guess it could happen. So you short 50,000 shares and they wanted to buy the company for $1 million a share. Yo, $50 million. Crazy. It sounds crazy, but it can happen, I guess. I mean, when do you think shorts? You don't know because people, they're in and out, right? So it's not like all the shorts was in at 10 and then they all holding on till when the price is 60 and they all bail at the same time. Some that got in at 10 and then they max pain was 15, but then you got new shorts jumping in at 15. They max pain was 25. You got new shorts jumping in at 25. They max pain is 40. So it's kind of cascading. You know what I mean? Because people are probably trying to short now thinking this is the top, right? And it just keeps going up and up and up and up and until everybody just reached capitulation. People's just like, I ain't touching it no more. Then that's when it falls down. There's nobody left to short it. There's nothing but sellers. Remember, because when you short a stock, you have to, right? You're buying it. You're buying it now to hopefully sell it. No, you're selling it now. And you got to buy the cover. For the most part, that's what it is. I don't know, I'm confusing myself. So, but the people that get max pain, they have to buy it back, causing more pressure to the upside, along with the regular Joes like us that want to buy it just to try to get long it. You know what I mean? So it's just a mess. It's just a hot mess. Shorting is dangerous. It's dangerous. This is an example. You could probably get on Twitter or something and read a bunch of stories of. You'll probably see people that got rich. I heard that somebody got rich, was made over $1 million or something like that. And just had 100. Wow, what was the story? Gosh, it wasn't even a lot of money, and they made over $1 million. I'm trying to think what it was. 100 shares. I can't think of what it was, but it wasn't even a lot of money, and they became a millionaire. If they sold it at the top, that's another thing. You hear these stories. Somebody can always show you the buy. Look how many shares but how about the sell? You got to sell it to realize it. You know what I mean? Let's see the sell. The sell is the true when you really gain it. You know what I mean? You might have somebody on paper right now. Look, whoa, I think it's going to 100 and they're going to hold. They wake up tomorrow and the stock is trading at $20. Now they lost damn near most of the gains because they didn't sell. That's why I don't be mad. I don't be mad at myself if I look at Tesla. I'm going to go back to Tesla because I was in and out, and I made a bunch of money in Tesla, maybe over 10,000 over the time, from last year for the most part now. And I can look at this chart. Let's see. I was in down here. Oh, you want to hear a story? When Tesla was trading right around here, I owned about 20 or 30 of the 400 calls. That was 2 years out. Can you believe that? And I sold it. Oh, man. getting mad thinking about it. But we'll use that as a situation. There's something on this dip. I think right here, I'm trying to zoom in on that. Remember this dip? It was trading sideways and it dipped. It looked like it was starting to make its way to zero. I was in those long calls and I dumped them right here on the break. And then look what happened. I could have been a millionaire, but would I have been? I don't know, because you probably couldn't see that, because to tell you the truth, I probably would have got out somewhere around here. I wouldn't have been there sitting on those calls, holding it. Wait, there's no way, man. I would have been like, oh, look at all this money, and sold it. You know what I mean? So I didn't lose that much because I know I would have sold it way down here somewhere. I would have sold, you know, and I would have been happy, but then I would have been pissed and see how high it would go. Nobody, I mean, to sit on those gains this high, nobody knows it was going this high, except for Kathy Wood. She's the only one that knew. Oh man, Francisco, man, you're saying a lot there. You said, when do you, okay, we talked about that. You said you have calls for next month. Is that on GameStop? I mean, hey, it could still go higher. So I don't know. Good luck. And exactly, they can't cover all at the same time. Right. And that causes the pressure. It's just eventually there'll be capitulation for everyone. You know, you smart ASF, you need more. Don't I? Yo, my subs are hidden. I'll tell y'all the hardcore people. I got 5 people there. I got 289 subs. And I see people that I can't justify it, man. And they got thousands of subs and thousands of views, you know. Oh well, maybe I suck. I don't know. I don't know what it is. It blows my mind every day though. I think I'm all right. And if you go back and look at my videos, my picks are pretty good. They're pretty good. But you know, I try to talk about what you guys want to talk about. I don't know. I'm learning. Maybe one day I could be like them. Snowball effect. We won. Lost 10,000 in Tilray, made it back and more. Good. Tilray was the same thing. I remember Tilray ran. It looked legitimate. For some reason, it went back down to zero, or not, you know, low. I can't remember exactly what happened. And then didn't they have another run? This right here. I forgot what happened here. I don't know if it was shorts being squeezed or what. People thought marijuana was just going to be. By the way, EVs, I think we might see something like this as well. Remember the whole marijuana stocks and everything was just ripping to the moon. A good EV. I think Drive, this is a good EV ETF, I guess. And I think, I don't know, man. I just see us coming back down maybe somewhere to here. I don't know. And Tesla will lead the way. All we need is some bad news, some bad whatever, and it'll just start chain reaction, you know, people. And what that would be is kind of the opposite of shorts, is be people wanting to protect the gains. So people's got gains, you know, all the way up to the upside. Right? There are people that held it. Unlike me, I would have got out early. We'll look at Tesla as an example of that. And let's pull up that month, pull up the monthly. We'll pull up the weekly, and then we can look at support and all of that as well. What was I just looking at? The weekly? Can't find it. Oh, here it is. So there's people in that's down here. People got in different ranges, right? You know, making money. They holding it, making money, holding it. And then if this thing starts to drop and get momentum, the people that was in here making that money, they're going to sell it because they want to hold their gains. They don't want it to go to zero or to become a losing trade. So selling begets more selling. And this is what caused that cascading kind of sell. So you sell, it's going down. Now all these people is making gains. And then you see this area of here, and this is why they call this support. You see all those people down there? Because everyone that bought here, right? Everyone that bought here is making money going up here. So most likely these people will be selling up here as it's coming down. And then you have people that missed the boat here. And then as it comes down to here, the stock price is here, new people is going to want to get in here, right? And so that's why it's kind of support, because these people are the most likely the sellers that came down, and then they're finished. And then you got new people getting in, right? And then it could go up again. New hands, right? It's new people, right? The weak hands got out. So then if it breaks some more, now you got more people that's, oh, I don't want to lose my money. The people down here, these, let's say these group of people, I don't want to lose my money, so they'll start selling as it approaches their range. And then when it gets down there, for the most part, they're out. So that's kind of where the support and resistance kind of comes from. But basically, a stock like this, now if we pull up the monthly and you just look at that ridiculousness of it, it could, if it starts to come straight, it'll be selling begets more selling. It'll be panic selling, and that's why you would want to buy, by the way. But where? That's support. I see, when you look at the monthly like this, I see one area of support, and that's right here. That's right there. That's only, well, here's the next one, right? They're obvious on the monthly. Let me zoom that in for you. That's it. It's just been straight up. So when this thing starts going down, it's going to go down hard. It's part of the S&P now, so therefore it can go down even harder. It could bring the whole market down, is basically what I'm saying. So you got to be careful. Here is where I already talked about the trend. Did I do it in the beginning of the video? Where I said, here's the trend of there's Tesla. There it is, right? That's the trend line. And if you were to fall from where it's at now to trend line, that's a 42% drop, and it's on trend. It's not even nothing to worry about, right? So that's how much you can stay in it. It's elevated. And it would just be, let's say it would be hitting the moving average and all that stuff. So it probably needs to be somewhere in this area, right? So just look out. I don't really foresee it just going straight up. It's a lot more competition. Before, they did this with no competition. Way more competition now this year. This is the year of competition. You see it all. There's ETFs now, right? So you got Ford on fire, GM on fire. I can't pull up. Is it Toyota? I don't know what they, gosh, what I used to, is it Toyota? Can't remember what their Toyota Motors, is that it? I don't think they have one. But Volkswagen, all of them guys, BMW, Chrysler, Daimler Chrysler, you got the Neos and the Rivians and man, unlimited competition. So it's a new game this year. And then these guys are losing the tax credits and all that stuff. So I think I don't know. I don't think it's going to be the same for Tesla this year as it's been. I'll just keep it at that. I can't really name everything, but it's definitely a new year. So I'm going to tell you the winner. The winner is the battery people. This is Albemarle, whatever. They make because they all run on lithium. The winner is the battery. And then there's another company, they do straight lithium now, got sold off, and it's Livent Corporation. The ticker symbol's lithium for the most part, LTHM. These are the guys that I could see keep going higher and higher and higher. They're the winner. You need lithium. So you could, these are in the lithium ETF, and that's LIT. Look at that, right? I do see this going higher because they all have one thing in common, and that's lithium. So if you want to play the EVs, this is where you need to do. This is where you need to be. And by the way, this ETF does have some Tesla in it. Okay, so yeah, that's how I would play it. Either that or the ALB, which I own ALB, and I own a little bit. I own some call spreads in this Livent. They're not a big player, but their whole business is lithium. And And I used to be in the LIT. I'm kind of waiting for a pullback, but I don't think there's such thing. I mean, last time this thing, there's no pullback coming here. Maybe when if everything does start to come down, it'll be a pullback, of course, but that's what you want to get in. So that's how I'm looking at it. You said buy lithium when I sell my calls. There you go. And Cashman, I got a credit spread on ARKK, sell 140, put buy 137 put. Let's take a look at it. Sell 140. What month? You didn't tell me the month. Oh, you're close. Okay, because it's trading at 149. I mean, it's hard to tell. Let's look at I'm looking at you're right here. You're real close to the money. See, generally, when you sell those puts, you want to be below support. Well, I guess you're right there. You're right at the 140. It looks like maybe it's more at the 137. Right here's your support. That area. Anyway, but you want to kind of sell below here, But it just depends on the risk, It depends on, how much risk, how much credit you're trying to collect, how much time you got on there. You just make a choice. Looks, damn, there's a lot of premium on this thing. Wow, wonder why you sold it. But look, you could come way down here. All right, I'm gonna sell this 131. All right, I'm way down here at the 20 delta. Let's sell the 131, and I'm 27 days out. And let's buy looks like, was there a split or something? Some weird strikes. Let's buy the 124.96, about a 6-point wide spread. Let's say 125. Let's do the 125.96. Wow. Right. So 70 cents, 5-point wide. Okay. So let's do 5 points, $5 wide. It'll cost me 70 cents. I mean, I'll get a 70 cents credit. So my risk is $4.30. Okay. So 70 divided by 430 is 16, gosh, 16%. Okay. I'm going to make 16% on my money in 27 days. Okay. So if I were to annualize that roughly, because it's almost a month. God, I can't. Wow. That's 192% a year on your money. So I need you to start thinking like that. Right? If you made 16% every year, take that every 30 days, every 27 days, you take that money, you roll it, do it again for the next 30, take it, do it again, take it, do it. Yeah, did I do that math right? Gosh, that seems high. 16. Yeah, that's right. That's roughly 192. Right? You basically, let's just call it 150. I'm going to be even safer with it. Anyway, so you make 150% for the year. And then look, you come over here, you look at the chart. Look, you're selling way down here. Look how far away out of the money that you are from the action. Instead of being right here, up close. You can have a big down day and whoosh, right? So I know it sounds weird, man. I'm risking 450. I'm risking 430 to collect 70 cents. It sounds like pennies, but that's where the chance is. And looking at that delta, you're going to be right 80% of the time. Right? So your delta, you said you sold the 140. It's saying you're going to be right. What is that? 63, 4. Why can't I do that math? 67, 100 minus 34, 66. Sometimes you have days like that, okay? Hey, you're going to be right 66% of the time. Also, there's something called, how you can get scared out of the position, right? Get scared out. Well, there's something called sitting here thinking, you could look at me trying to think. Probability of touching, okay? The probability of touching is generally twice that delta. All right, so let's go back to the trade tab. And basically, what's the chance of it touching 140 before 27 days out? And you know, that'll get you scared, right? And you'll give it up. Well, on Thinkorswim, there's actually there's something that we can look up called probability of touching right here. So here it is. You have a 74% chance of it touching that. That's pretty high. Okay, that's pretty high of it touching here. And you know if it comes down, and that 140, you're gonna get scared because your position most likely is gonna be losing, and you're gonna buy it back. And that's what you gotta be worried about being up here. Yeah, the credit's good, blah blah, you know, but can you handle it? You almost need to stay in the position to get that true probability. Well, a lot of people can't handle that. So you just always got to keep the probability of touching in the back of your head. Thinkorswim has it right here. It's high. Okay, so let me go down to my 130 now, example. Look, probability of touching 44%. So I have a better chance. I have over 50% chance that it's not even going to go there. I got 80% chance of being right and a 50% chance for I'm rounding it off. I'll be more specific. 56% chance of it not even touching 130. And therefore, it's not going to, a good chance of it not scaring me out of the trade. So think longer term. Think, I'll collect these 16%. I'll collect that 16% in 27 days. Look, you can't get that nowhere. You can't buy a junk bond that's going to pay you 16%. So it's very, it's a good deal. 27 days, 16%. If I gave them $1,000, if I say, hey, let's talk to me. Give me $1,000. Hey, cash, let me $1,000. In 27 days, I'll give you back $160 with it. I'll give you $1,000 and $160. Man, you don't even know me that well. You'll probably be like, here you go. You know what I mean? No doubt. So yeah, that's a good trade. This is the one I be trying to teach on my videos. I was doing with Ford. I try to throw it out there, and no one watches these videos because it seems like chump change, but you have to analyze it. I know everybody that's making the videos and they want the home runs. You see them on Twitter or whatever. You see them on YouTube. Hey, I made such and such 10,000%, or I made, look at me, I $150,000 that was in the Tesla calls or whatever. Yeah, that's great. Let me tell you something. Someone that made $150,000 on the Tesla calls, or 50,000 on such and such, I guarantee you they have losses just as big or bigger. You guys watch my channel. You watch my Twitter. Y'all might see me occasionally put up a tweet, or I used to do it on YouTube stories. I don't have enough subs. I don't have enough subs to do the YouTube stories anymore. So I need you guys to sub up so I could do the stories. I'll show you my gains. But I might show you games I made 20,000 today. I do 3 accounts. I'm like, oh, this account made 7, this made 7, this one made 6. I made 20,000. Ooh, look at me. Ooh. But let me tell you something. I have some days I lost that. Okay. So I have days that I lost as much as I gained when I show you those games. If I show you a day I made 7,000, I have days I lost 7,000. You know what I mean? So you see people that's up 150. I guarantee you had these days when they're down 150. Or they're up 150 now and they never was down, but it's going to come. They're going to blow their account up. Because to make that money is not easy. You have a lot on the line. It's a lot of risk, right? More risk, more reward. So you'll risk it, and then it won't come true, and then you lose it. So just kind of keep that in the back of the mind. Try to play the safer trades, and I get it, man. I want to be up here close to the action, get that good credit, get that, but have some of that sense come in. This is me. I'm talking about me. I'm not talking about you. I'm talking about me. Have some of that sense coming up, like, Let me just play it down here. Play it safe, right? Play it safe. So that's how I kind of do it. You said people won't post it. I post my gains. You haven't been watching my channel. I used to post my gains every day. I used to post the whole portfolio. And then I started losing. I was on a bad streak, man. I was losing like 5,000 a day for like damn near a week and a half. And I just focused, and I just said, I'm gonna stop showing my gains and I'm gonna concentrate. Stop showing my portfolio and for the most part, all's been good. Right now, my portfolios is top. It's the most. I have the most money I ever had right now. But yeah, it's been great. Hopefully everybody's that way in the market. I mean, it's riding with the market. My equity curve kind of it's not that steep, but it's going from lower left to upper right. So I think my equity curve looks more like a Walmart. Yeah, it looks more like something like that. I need to take a picture of it. So I was going to do a video on it, but I couldn't get the picture right. Something like that. So yeah, we're near the top. It's something like that. I was gonna make a point, but I forgot. I forgot what I was gonna say. But oh yeah, I used to post all day. So anyway, I stopped posting it, and I kind of got back. I got everything back, and then for the most part, I really don't post now, only because I think it was taking me out of my concentration. That's the reason, So oh, you said you mean they losses? Yeah, I did, but I did, man. It hurts. I'm telling you, that's painful. Posting your losses, it makes you come to reality. But for the most part, in the beginning when I was doing it, I thought it made me posting your losses when you do YouTube videos, even though I don't have a lot of subscribers and people watching me, it makes me trade. I thought I was trading better, and for the most part I was, because I feel I can't really do those dumb trades where I'm going to have a big loss, because I have to show you. I'm going to show you my losses, and you're going to think I'm stupid. I'm losing a shitload of money. So it made me say, you know what? It made me trade more careful, right? So, but then for some reason, I just was losing it, man. I was losing it, but I caught it back. I got my little groove back. Risk it for the biscuit. I mean losses, bro. Okay, I got you, man. My bad. My AMD debit spread working. Cool. How far are you out of the money? All right, so we was going to talk about Walmart, and here's my little box right here, because I think this one is giving out the cash. You can see the stochastic churning. I love stocks that's not in the market, meaning not in the market. That's not on TV, that the ones they're not talking about, that's in a slow uptrend. And for the most part, they don't take big downturns. But, for the most part, if you look at Walmart's downturns, it's already, right, it did it here. It has its moments. Let's see if I can draw it here, right here. And then here's that last one. So, I forgot one right here. Right, so I think it had its moment. You can see it sitting right there as support. Earnings is next week. I could bring up the earnings right there. It's next week. Wait, yeah, no, it's not. February 18th. So I don't think it's going to drop much going into earnings. So I think this area you can kind of safe. You don't want to sell the earnings week, right? So I said February. You don't want to sell. You can see I got a position on right now. There it is. You don't want to sell that 19th. The vols popped. It's not going to, the premium is not going to come out until after earnings. So you want to sell before that. And you can see what I got on. Let's see what I got on. See, I'm way the hell down here. See, you got right at the 20. I sold the 140, 135. And yeah, I'm way down here. 140, 135. Now I know it looks like I'm close to the money, but what the hell would I sell? I know it looks like I'm close to the money, but if you look at the delta, I'm at a 20 delta. That means there's an 80% chance of me being right, a 44% chance that it will touch that. So, right? So it's not much. So I'm right there, man. I think we're safe. I think that's just going to print me cash right into the earnings. Might sell more if the market opens lower or whatever. There's no way. I can't say, of course the market, when I say that, the market can do anything it wants to do it, right? Okay. Since I said that, there's no way Walmart's trading down here going into earnings at 135 where it was clear back here in August. So a lot of things has changed, right? The delivery, the Walmart Plus, and even though they ain't released those numbers yet, I'm sure they're okay. But I don't think they're the greatest because they didn't release it. If they was great, they'd be like, oh my gosh, we got 100,000 subscribers on Walmart Plus. Anyway, so yeah, that's the stocks I like trading. What's that stock you mentioned? Cashmatic. Damn, how much days out? Oh, I'm gosh, what is it? 20 days left. I put this trade on I don't know. I think I put it on when it was 30 days. But anyway, I don't want to trade the 19th because that's the earnings options week, right? I'm selling premium. So the theta, so basically these options will basically go to zero. It's not going to happen on the earnings week because it's earnings week, right? The premium is going to stay pumped up in those options until it reports. By the way, I think I had something else. I think I had some calls in here. Oh, no, I didn't. Anyway, so that's what I'm doing. So hopefully, yeah, man, play it safe. Play it safer. Think longer term. And let me tell you something, man. I like to hit some home runs. I got some out of the money calls on the leaps. I got some of those going on. But my main game is selling, generally I'd like to stay below a 20 delta. Below a 20 delta, depending on how much premium I'm going to get and how much, it all depends how far out, how much confidence I got in the stock, where support at, all of that stuff. But for the most part, I like hanging around there, putting more the odds in my favor, and I like collecting around that 15, 16%. I collect, I'll never do it under 10%, never. But right around that 15, 16%, 12%, because you got to annualize it. And then when you annualize it, then you're going to be like, wow, man, that's nice. You're like, man, I made damn near 200% on my money. And you was selling these credit. You could it even gives you room to be wrong, right? You could kind of bail out early and say, let's say you may use up 80%. That's still huge, right? Because some of the losses you took, still huge, So I don't want to get scared out of the trade. I get scared out. So I wanted to stay up here. And for the most part, if you look at Walmart, since way down here, and you could just see it stair stepping, right? Here's a low. How about I delete all of the pictures for you? And here's a low, right? It's not breaking support, right? It's just kind of doing its thing. You see where I'm going with this, if you can draw the lines, right? It's not breaking support. So we could stay under here all day. It hasn't broke support in, gosh, since the pandemic started way back then, right? So here, it was doing this thing even before here. So we had here just before the pandemic, and then boom, the pandemic hit. It went to 102. So it broke support just like everything else, right, in the market. But since then, it's been doing its thing, right? We was able to sell below all of these levels of support without worrying. So therefore, I think here's the same area. And I think cash machine, we can make money all day. And once it reports, it'll probably pop up. Generally, Walmart sells off after the pop, so you don't want to sell after that. It seems to do that all the time. Here, reported, popped, dropped, reported, pop, drop, reported, pop, drop. So that's what Walmart does. It'll most likely pop about good $10 or so, probably be up here by the high, maybe 155, and then slowly give it all the way back going into next earnings. By the time next earnings comes, the stock will be somewhere around 152, 153, somewhere around this area. Just doing what it's always doing. These stocks have patterns. You just pick it out. I gave you guys AMD. We talked about it, and we did get the pop. And I was saying, look, I like it. It's going right into this moving average right here, right there. Moving average. Hey, I'm looking at my people. What, I got 4 people up in here. See, I'm talking about the small trade, make 16%. People leave. I'm telling you, those videos do no good. I got to sit here and talk about how you can make 3,000% on Tesla or NIO. That's what I got to talk about at the people up in here. When I'm talking about 16% on a Walmart trade, bye-bye. Oh my gosh, that's great. Bye-bye. See you later. Anyway, but I thought, hey, we could talk about AMD. It's crashing right into this. I love this trade right about now. I think the setup is beautiful, right? So consolidation here right into the moving average. I think it goes higher. And gosh, we talked about Apple. I'll go ahead and get ready to wrap it up since I'm boring some people. Apple looks real good going in. Amazon, just looking at the fangs. We'll see what this does next week. But if you look back, Amazon had that. It's been having those rips and it comes back down. So here's another rip. Volume wasn't the greatest. We'll see what happens. I wanted to see it bust out this range. It was a little disappointing knowing that, going back to the heat map, that Amazon, you can see it was red. All the fangs was up and Amazon was down on Friday. That just made me go, not the way you want to act when you're reporting next week, right? So reports, actually, is it saying February 2nd? Maybe it doesn't report next week. February 2nd, that's the week after next, isn't it? Pull up the daily. February 2nd. Yeah, that's next Tuesday. Okay, so it's got another week. Anyway, but just not the way you want to act going into earnings, right? Anyway, but if I were to guess, I see it being somewhere at the top of the range here as it reports and setting up to break out. But I don't know, man. Amazon spends a lot of money, and that's the thing. They make a lot of money. We all know Amazon's killing it with sales, but they spend a lot of money. Okay, and that's what brings the stock down $200-$300 when it reports, if it comes down, because of spending. This is the only stock that gets punished for spending, it seems like. Even though they can crush it on the earnings, if they're gonna spend any of it, it just sells off. Oh man. But I didn't even see your question. You said, what do I think about Amazon, Tesla? I just talked about them. Without even seeing this, we just talked about Amazon, Apple, and Tesla. I think Apple's up. Amazon, I don't know, too early to tell. I think it goes to the top of the range before reports. Tesla, I actually think Tesla goes higher. Well, I don't know. I mean, it's set up to, put it this way, set up to go higher. The chart looks like it wants to go higher, but hopefully they say the right things because it's so toppy. It's got so much premium and so much hype in it. They set the bar so high, they really have to do a lot to leap that bar. They have to say a lot, okay? This is just so-so. It's going to sell off. That's what bothers me about Tesla. The bar is set tremendously high. It's going to take more than an average report for this thing to be flying up, in my opinion. So they better say some new shit that we don't even know about or whatever to keep the momentum going, You said it's 5 strikes wide, a better buck for your money. The closer you are in the strike, say 2, 3, 4, 5 strikes wide or whatever, you get more premium. But the wider you are, the better your chances of a winning trade. It increases your probability of success. I don't know why. Tasty Trade. Watch that channel. They got all the statistics and everything you need to know about credit spreads on there. And it was one of their market measures videos. And it's when I started making, they did a video on widening the strikes, right? So if you have enough money, instead of doing 2 5-put wide strikes, do 1 10-put wide. And they showed the statistics behind it and the probability of success, and it was actually better. So I was like, you know what? I started widening my strike. I started doing 20, 30, 40, 50, a lot on the line, and I started making a lot more money. And I was able to get out of the trades even faster with the wider strikes. So it seems that the closer you are with the strikes, like say a 5-point wide strike versus 10-point wide strike, man, it'll take the 10-point wide strike will get to 50% max profit before the 5-point wide strike does. So that's why I like the wider strikes. But the probabilities is still going to be, well, I'll take that back. Basically, I find myself, my own experience, that with the 5-point wide versus the 10-point wide, that you're in the trade longer, you know. All right, I'm gonna get ready to hang this up, y'all. Y'all want to talk about anything else? And that's it. Did I miss anything? Francisco Cashmatic. Francisco, appreciate you being in here. Vicky Sue, appreciate if you're still here, appreciate you. The jewelry box. Wait a minute. These are people. And that's it. All right, so I'm gonna go ahead and end the video. Subscribe, y'all. I really need you to subscribe so I can do the YouTube stories and all that stuff. Hit the thumbs up, share me, do what you got to do to tell your friends. Tell your friends, man. Come back, get into any of the YouTube comments. Let me know your trade. Hey, keep me updated on your shit. Gosh. On your trades, the trades that we discussed, and hopefully Cashmatic, you know, like I said, there's nothing wrong with getting closer to the money. Just remember your risk is higher. That's all. Your risk is higher, and try to have more successful trades, even if at lower risk, because those lower risk trades, they add up. They add up quick. Let me tell you something. If you was doing those trades, let's say for 2-3 years, if we brought out the compound calculator, and I did that on that video called the simple, what did I call it? The secret sauce. By the way, Francisco, I think you might be new. Check out my secret sauce video. I just did it a couple of videos ago. You'll have more money than anybody that you even know on TV or whatever in 10 years or whatever. I know it's a while, even less than that, but you'll be multi-millionaire just by doing that little 16, percent, because it adds up. And like I said, remember the people that's killing it with the $200,000 trade and all that stuff. You better believe they lost $200,000, or they going to lose that much at one time or another. It's coming, or it either came or it's coming. Me myself, I blew up 2 accounts before already. So I remember when I first started trading, when I started making money, I was killing it. I was trading Apple. I'm gonna pull it up. This was 2005, I think. Could I go back that far? 2000, somewhere around here. Yeah, I think here on this run up right here. Okay, Apple was going up every day. I was buying call. I didn't know what the hell I was doing. I thought I did at the time. I was buying calls, man. I was making $1,000 a day, damn near, killing it. I turned like $500 into over $20,000. Now, I was taking the money out. Before I blew it up, I spent that money. I was pulling the money out, paying my mortgage, paying bills. I kept pulling. Oh, made $1,000. I made $1,000 withdrawal. I kept pulling the money out, but I wound up blowing that account up, and you can see why. See, it got up to here, and then look, all of a sudden, Apple don't go up no more all the time. It goes down from here, from January to damn near June. If you bought any calls, you lost money. So I was like, man, this trade don't work anymore. But yeah. So, and by the way, a lot of people got into the market then. So I remember those emotions, and I think the same thing is going to happen once we start going down. And for the most part, if you started investing from the pandemic on up, everyone made money. So like you're watching me, right? You might watch other YouTube channels. I'll give you some homework on their channels. Look at when they started talking about investing in their channels. And the ones that I come across, it's all right here. It's all right there in March. Jumping on the bandwagon. Go back to my videos. You got to go to Dre Trade 1. I've been way here. By the way, I got videos on this channel right here that go way back in that 2005 era. So I've been doing it for a while. But basically what I'm getting at is, who lost money in here? Okay, so everybody's a genius. Everybody. You know what I mean? Like I'm saying, I'm up 330%. I don't have years like that. See, I know that was like, I'm looking at the reason why. It's crazy. I wish I could do that every year. I'd be a billionaire. I would be a billionaire within 4 years if I can keep doing that. I can't keep doing it. You got to remember the best hedge fund managers, the best hedge fund, like say Kathy Wood or no, she's not a hedge fund. Anyway, the best hedge fund managers, a real good one will bring in 20%. All right. 15% is like even good. 10%, I mean, that's good, right? That these guys are getting paid millions in salary or commissions, they 2% off the whole fund or whatever, just to bring in, say, 15%. So if we got kids that just graduated high school last year making 100%, 3, 4, 500%, it's not gonna last, man. It's not gonna last. Okay, because then they need to be running a hedge fund. So just kind of keep everything in perspective of what's going on. Most of them don't remember 2000, and 2000 was killer because it wasn't really, you didn't really have this huge spike. Can y'all see what's going on? You didn't really have that. It was a slow grind for 2 years. Oh man, I can't even bring it up. I don't know why. I know. If I bring up the yearly, let's bring up my yearly chart. Here's the 2000 era, right? So right here, you can see just small little candles, right? For 2 years. So you can see slow grind. If you bought leap calls, you was gonna lose. It doesn't matter. If you bought any call in that 2-year span, you lost money. You lost faith in the market here. Like, oh shit, the market ain't going up no more. Just don't go up no more. Kind of went like way back in the 50s or whatever, when we was having downturns like that. And since then, the market, we had 2008, 3 months, whatever, right? That's the bear market, 3 months, not 2 years. I mean, 3 months ain't shit. Just hold your positions. Matter of fact, so many people, even me, I sold out of my 401ks and stuff. You know, I should have held. I should have been buying more, just saying, oh, well, I'll hold. It's not like I need the money tomorrow. If you don't need it, for the most part, if you don't need the money in the next 4 months, just keep it in there because you know it comes back. Has that, but I don't know. We're going to hit this one day. I don't know when it's going to happen. Where it's going to be that 2-3 year funk. And no, you know what? All the videos on YouTube, they will all go away. There'll be no geniuses. Because don't matter what stock you throw the dart at, it's going down. Okay? So unless you buying puts or you shorting, it's going down. That's how it was in 2000. It was terrible. Terrible. You know, so yeah, like I said, no big spike, just drift lower every day for 2 years. I gave up. I didn't get back in the market. I had shit. I'll put this out here. You guys, you know, you stayed in the video this long. I had like over $100,000 and it wound up whittling down to 20. And somewhere around the low, I sold my, it was all in 401k money. I was dumping all kinds of cash in there. And because of the run up here. All right, I was like, oh shit, it was a printing machine in the 90s. It was straight. That's why people say this reminds them of them. It doesn't matter what you do. So I wind up buying my, what did I do? I took all the money out and I bought a minivan with it. I was like, I'm tired of getting my statements every month and I lost 500, 600, 300, 400 every month. I just lose. Remember back then you really couldn't log, well, you couldn't log on. I mean, you could, that was new, right? Back then, even in the 90s, that's when you had the newspaper and you're looking up your stock quotes in the newspaper, or you're calling the line, please enter ticker. And you go like 22A, B, B, and you're entering ticker symbols that way. And it'll give you a 20-minute-old quote or a day-old quote. You don't even get, you have to pay for live quotes. So anyway, yeah, so I bought a minivan. I bought a minivan for $20, 20,000. You know what? No, it wasn't. Something like 14,000. Then I took the other 6,000. I don't know what I did with it. And I was like, I'm just done. Stock market, you lose money. It's a losing machine. And then it came back, and then I started getting back into it. It's like, oh wow, man, this thing is running. And then here comes 2008 again. We went down, lost 50% in 2 months. Right. So, and that was it wasn't the fastest comeback. As you can see, we didn't break even. We didn't get to those highs until 2013. So it took 4 years to get to the top. Here, this crash, you don't even see it on this chart. This is the yearly chart. Each spike here represents a year. You don't even see it. It's here. You see it in the stem, right? It's like a hammer candle. And this is, by the way, this candle is what makes me just think we're just going to go crazy to the upside. But you don't even see it. It wasn't even strong enough to print a red candle. So the drop was nothing, basically. It was nothing, and everybody makes money. You throw a dart at a chart, it's going to make money. That's where we are. There's no geniuses. I'm not one. There's just no geniuses. Everybody makes money in the bull market. The smart ones are the ones that make money in the bear market, and not a 2-month bear, not a, what is that? What was that? A 6-week bear market? Whatever. Not a 6-week, 2-year, a 2-month, 3-month, 6-month bear market, and a bear market of at least a year. And if you're making money in there, or at least making above what the S&P makes, I should say above what the S&P will lose, let's say it lost 10% that year, you're a genius. Well, I only lost 5%. You're a genius. That guy's getting paid millions to manage people's money. Remember, because most of them just got to beat the averages, because you put your money into an S&P 500 fund, right? That's easy. That's, you know what I'm saying? So why would I need to pay somebody to make less than S&P 500? So these managers, they have to beat the ones that the ones that are getting paid like serious money. They got to beat the S&P 500. They're going to lose their job, But look at that. Look at the yearly. Let's clear all of this line out, because I love looking at this. You're not going to see this graph brought up anywhere on anyone else's channel. You got to look at the yearlies. Time. Let's make it 20. Anyway, the most Thinkorswim is sending me, okay, 93. Basically, I'm going to draw a simple trend line like I had before. I'm going to draw that. We could say we overextended, right? We overshot right there. But when you look at this, you see what I'm saying? What are we going to the moon? You see how, look at that. This gap here is not supposed to happen like that. It's not going to be this much space, right? Just take off and just keep going straight up. It's going to come back down. Maybe it goes sideways, right? And if it were to go sideways, just chop around, let's say like that, and then go up and there's no serious drop. Well, guess what year this is right here? This is 2026. We would have to go sideways for the next 5 years to be on trend. And then, no one would be making money. You know who's going to be making money on that? The credit spreads, the people selling the credit spreads. Call buyers or not, they're just not going to make money. So anyway, sideways. So we don't even have to go down. If we just go sideways, it's going to be a 5-year period of making nothing. and then get ready, get ready into 2026. So yeah, I mean, I'm worried, and I'm long, man. I'm long. I'm not sitting on puts or shorting things. I'm long. But we'll just see. Just be ready. You know what I mean? Just think about, keep the stuff in the back of your head. I'm not saying go short, but it's probably generally it is a good time to sell when we overextended. We was overextended right here, not much. We hit trend, overextended right here, well, even right here. You can see we hit trend again. It was really quick. If you blinked, you missed it. We overextended again. So we probably got to hit trend again, and we've been doing that ever since 2009. So it's just something to consider. By the way, if you're new to my channel, subscribe, hit the bell. Max Plug, what's up, man? You said, do you invest in crypto? No, I don't. You know what? I got $20 in the Bitcoin. I opened up the Cash App. It's like, you know what? I'll keep looking at it. Let me put the $20 in there, see what's going on. Let's check it out. See if I'm losing any money. I think it's way too volatile. I think it's nothing. I think it's faddish. $27? Well, I had more than 20. I mean, Cash App was like giving me some money and whatnot. So there it is, man. I got like $27. See that Bitcoin graph? See how it's going down? So Bitcoin, according to Cash App, is $32. 32,000 right now. Still kind of heading lower. It's on a downtrend since January 9th. But I don't know, man. No, I'm not really. I don't really. It's just gonna have to leave without me. It's just gonna have to go to 100,000 shares without me. I'd rather sell my credit spreads and make my money that way. Like I was just telling Cashmatic, I can make, you can make 200% in a year, 150 or whatever, doing these little 16% 30-day credit spreads, and that's I'd rather do that than just feel like I got to be in the Bitcoin. Like I was saying, and it's not bragging, I'm just saying I made 300%. Let's say if I could do that this year as well, why do I got to be in Bitcoin? So that's how I kind of look at it. Alan, you said something's off with my hair. I'm an old dude. See, hair's just falling out of there. I'm 52 years old. So I'm not like a young kid. I didn't just get out of college or graduate. Yo, you said I'm joking. So yeah, I got some thin spots when I duck down. That's me losing it. I'm lucky to have this, really. I don't have to do the Jordan yet. Usually people my age, they're already doing the Jordan thing. I still got a little hairline going. But is it the future? You said, are you a grandpa? Nah. Well, not a biological one. My stepkids in my prior marriage had kids, so that would make me a step grandpa. But when you get divorced, are you still a step? So I don't even know how that works. I don't know the rules, but they call me grandpa. You say, yeah, totally, exactly. So yeah, I'm just now getting. I think so too. So we was talking about it earlier, and I started with Tesla. If you watched the video, I just think Tesla will wind up bringing the whole market down. Is my little guess of how we go down. What brought us up will kind of bring us down. By the way, Bitcoin, I throw that in there as well. Right? It's like everything that. Notice when anything gets hot. So we had Tesla, we had Bitcoin, we had the EVs, now the SPACs, right? The SPACs that's another thing I wanted to talk about. Is what is it, 1020? It's crazy. And then you got the hot ones. Everything goes up. If you blink, you miss the run, right? So let's say, I'll just use this as an example. Let's say water bottles is the hot shit tomorrow because China is they're gonna give every family 1,000 cases of water, right? Every family 1,000 cases of water starting tomorrow, whatever, and they need water. The water bottles was basically the move. You missed the move like that. You see what it's like? Everything in all plastic and water bottle stocks will be up. and then it's over. It's like everything just jumps from 0 to 1,000, and then it's done. And it's not weird. It's just like 2000 with the .coms. As soon as there was a .com coming out, stock price IPO 16, and stock opens up at 300. Right. So what was that IPO that just opened up the other day? The hot one, was it Airbnb? Was that the latest one? It was Airbnb and DoorDash, and this is crazy, right? So we just missed it. We missed, it's very reminiscent of the year 2000. And I was around. I was trading, and I did not much. I bought some stocks here, and I was more like trading my 401k just by dumping everything I could possibly can. And because when back then you buy a stock, it costs you $50 to buy and $50 to sell. So I would buy a stock thinking so I can look in the paper to see where my stock would be. Oh, let me buy the paper today so I can get a quote. Right? Talking about times change, man. Anyway, but yeah, very reminiscent back then. Didn't matter what the .com was. It didn't matter. If it said .com, it was up 100. Didn't matter. You didn't even know what it needed to do. So that's like these SPACs today. It's the SPACs and anything EV. Anything. You could just say, yeah, do you see some of these cheap companies coming out of nowhere that has the word autonomous in it? It's just like you put the word autonomous in your description. What is it? When you on FinViz, like think of job description, company description, or whatever. Your stock is just immediately going to get 2, 3, 4, 500% pop. Because you do autonomous something. People don't even know what it is. I mean, we had Nikola just jumping like crazy, and shit didn't even work. That's, by the way, that's a sign of of the frothiness of just happen to be in it. It's crazy. But anyway, if we look at the S&P 500, let's pull up the Qs, by the way, see what this chart looks like to the Qs and try to draw a trend line. At least the Qs have that. Well, I don't know. Let me zoom in here so you guys can see. There we go. Right? Oh my gosh, look at that space. So if that's the trend since 2013, or maybe even further, if I extend it a little further, I'm kind of cheating there. Almost like 2009, almost like the S&P. And you would to measure where it is right now, and you would to bring it down to the trend line. That's a 41% drop. And it's not even a broken chart. It's on trend. Right? For the NASDAQ to be in a bear market, this is insane. For the NASDAQ to be in a bear market is right there. People will be panicking. Oh my gosh, NASDAQ's down 20%, and it's nowhere near the trend. It's nowhere near the trend. Crazy. Right? So that's where we are. And I'm sorry, it's just not going to continue to go up. But I could tell you this. I could tell you it doesn't have to come down tomorrow. We can draw a line like this. It could do that, right? That's this year, right? So it could be another year. And then maybe it comes up a little bit like that. And then you get the infamous like that, right? So we're kind of, I wish that high would go away. Could I get rid of those bubbles? I don't want to show high. Where's appearance? I don't want to show high, low. Here we go. Let's get rid of that. All right. So you can see, right? So we can extend this green for the year and then get a little bit more for next year. So yeah, it could still it doesn't have to happen right now. But just keep that in mind, because once we get some kind of candle that looks like that on a yearly, it's a long way down. And we could still be on trend, right? So I don't know what's going to bring it down. Some kind of crisis. It's going to be if we don't go sideways, like I was saying, it's going to be some kind of crisis, right? Student loan. They keep talking about the student loan crisis, right? Some kind of debt, something debt. By the way, if anything comes out with debt, finance, banks, any failures and money, anything like that, anything finance, debt wise, or bonds crash, or get out. Okay. Get out if we see a sign of that anywhere in the world, because that seems to always be the trigger. Any kind of credit issues, money, bonds, something like that, where liquidity is just not flowing anymore. All right. So that's generally the start. That was it in 2008. I don't know what the hell was it. And it was it in when was that last crash? Just the pandemic. That was unique. And I don't know what exactly happened in 2000. I think the market just got tired of the dot-coms. I remember, I tell you what, I do remember Cisco reported earnings. Everything was all lofty. Cisco came out, and this is when Cisco's a hot stock. Cisco's like, it's like $100 a share. Basically, everybody wanted to buy Cisco. Here, look at that. Look at right there. Isn't that crazy to believe that was Cisco? Way here. And remember, I was just telling you what the candle will look like. So imagine at once this was a green candle before it turned down. Cisco came out with earnings, right? And said they basically said everything that wasn't happening. Well, we're not really selling that many routers. It's not really happening out there. And Cisco, I wouldn't say it went down 10, 20%. And basically that was it. That was it. When Cisco reported, that was it. It was just over. It's just funny because it happened like that. Everybody was booming. Cisco came out with a bad report, then everybody started coming out with a bad report, and they just wasn't selling like we thought it was selling. So that's where I'm kind of getting with Tesla. When I talk about Tesla, I think they, not saying this report, but they might come out and say, you know what? Yeah, we only sold 400,000 cars, or such not happening. It's just not popping like we thought it would. And then all that froth that got built up into it, it just brings down everything. But yeah, it was Cisco. Look at that. Can you believe Cisco was way up here and had a chart like that? And you can see it's coming back. Looks like, looking at this yearly, by the way, looks like a pretty good time to get into Cisco. Just looking at this chart right here, this is like, hey, start accumulating. Right? Nice little candle right here, a high or low. Start accumulating. It's not like it's gonna. This is a yearly chart. These are yearly candles, so it's not gonna happen tomorrow, next month, next 3 months. It's gonna take years. So you can accumulate a position in Cisco that's gonna for years, for the long term. By looking at this chart right here. Not overvalued, and they pay a dividend, right? Cisco, 3.22%. And it's in tech. Eventually, they're going to turn around. Maybe they're going to need routers in the EVs. And they're going to be like, oh, my gosh, Cisco router. You need a router in the EVs now. And then let me tell you something. If that happened, somehow we need the routers in whatever the hell they sell. Remember I was telling you, next thing you know, it'll be trading at 80 and we missed the move. It'd be like that. The move is, boom, done. So that's what I don't like with the frothiness. It's not even a slow run up. And you can see how it ran up here in the 94 or 5. See, it was slow. So you can see the frothiness, right? And then boom, big ass candle right there. So if you go to the Qs, let's pull up the Qs now. And now that we got a good look at the Cisco froth. I don't know what the hell I typed in. QQQ. Let's pull it up. So you see how the candles are getting bigger and bigger and bigger. Maybe one more big, huge candle. That's what I'm saying. It's not quite over yet. Maybe one huge candle, and then that will bring it down. But we'll definitely see something, I'm going back to the Cisco chart, with a tail like that, right? See that tail? And we had it here. But and you can see that was, if you got out and by looking at that tail, from the top of that tail to the bottom, that's 42%. But this was the pandemic. You blinked, it came right back. But let's say there was no pandemic. But when you see a tail like that, especially on a yearly, this is why I like pulling up the yearlies. These tails, by the way, are the bigger the chart, the more important they are, right? So it's more important on a weekly and then even more important on a monthly. And this is a yearly, way more important on a yearly. You can see that, right? So you can see the sell-off. If you'd have got off when you see that, you would have saved yourself lots of money. Let's say you saw that tail, you got out right here at the close, you would have saved 51%. Let's say you saw it again right here in 2010. You're like, oh my God, look at that tail. Let me get out. I don't like that. You would have saved yourself 34%. Here, you don't have a red candle. So not, maybe, you do have the tail. There was some selling. So, and then you get it here. Some more selling, but it's still a green candle. But look what happened. Maybe 2 green candles with tails equal 1 red. I don't know, but it was a sell-off. There is one thing about when you see that, there's selling pressure up here, right? So when Cisco gets to this level, you'll see some more tail in action. It'll go sideways. There's definitely sellers up there. So you guys saying anything? Revan Times, for sure. D-Link mixtape. What's up? Hello, do I like your show? What platform is good trading in the UK? I don't know. I'm here in the United States. I'm on Thinkorswim. I like Thinkorswim. By the way, I trade with Thinkorswim, Charles Schwab. I still have my Fidelity, but I don't trade in it no more. Thinkorswim, Schwab. Oh, and Tastyworks. All right. So I use all 3 of those platforms. I don't know what's over there in the Interactive Brokers, ain't they over there? I used to trade with them, by the way. I like them. I like Interactive Brokers. So yeah, Interactive Brokers. You said going to smoke. Good stream, bro. I'll be back. Cool, man. Hit that subscribe button, hit the bell. I go live here and there. Today's Sunday. Oh my gosh, it's time for me to go to bed. I gotta work at midnight. I didn't realize it was 7 o'clock Eastern. I just figure I get on here, man. Shoot the shot. I don't even know what I'm talking about. I just get in here. Max Pug, Crazy Times. I've seen a lot of different people up in here. Definitely. Adria Linzondo, definitely. You said what? Sorry, I missed you. I'm a little late. What is your go-to stock? I don't really have a go-to stock, but I guess it's Amazon. I like selling credit spreads. Oh, by the way, that candle looks like Cisco. Doesn't it? Looks like Cisco. It was Amazon. I like selling credit spreads on it because you get lots of credit. If you was doing it all in this area right here, you could make great money, right? I like Amazon. I like the big stocks. So I like Amazon. I like Google, even though it's not liquid. My great chart for the only thing, I think Google reports next week. You can see the breakout, right? You can see. Let me show you this. I did this in the other video. Show you Netflix, for instance. Same thing, right? Netflix went to the top of the range, sold off. It didn't break out at earnings, even though it was like up 17%. It was crazy. It was crazy. So you go over here to Google, which didn't report yet, and it already broke out. It already broke out. To me, that's saying something, or it actually could mean 2 things, I hate to say. We could have got the move already, but I tell you what, it broke out. Okay, so maybe it doesn't move on earnings, but it will go higher. So I like Google. Google does, though. Google's a stock that gives you the pullback, though. So if you missed it, well, it's not actually, you didn't miss nothing yet. You could probably still get in. But Google does give you pullbacks. You can see all the red. If I pull up the daily, you can see the zigzag, see all of the sell-offs. Google gives it to you all the time. Google's not one of them stocks that just keep going straight up like a Tesla or whatever. So anytime Google's up, just kind of wait a few. Wait a week or so. It'll give you the price. You said think or swim, don't do. Yeah. So interactive brokers, man, they gotta be, if they're not out there, I have no idea, Alan, I'm going backwards in the comments. You said give him a chance to join. I don't know what you're talking about. Oh, looks like a good idea to me. That way we can see the opinion of other persons. I'm sorry, y'all. I was late with the comments. You said, will Twitter go down even more? By the way, I like Twitter. Twitter's in the crosshairs of the politicians right now. And that's the only thing really holding it back. But what I've been noticing just here lately, while especially on some of the days the market was down, like, see, it was up 2%. I'm like, here's your sell-off. Like I always say, Twitter, I did a video on it, and you can see my little sell-offs. I got all the sell-offs drawn down. See that? Get rid of that. And the thing with Twitter, notice all the sell-offs are equal length, right? This is something you should do in your own charts. You could just mark them. And for the most part, it tells you exactly what it's going to do. They're even perfectly spaced. You can almost tell when it's going to come. These are not as strong, right? Perfectly spaced, right? Doesn't run. So here's your sell-off. It's catching traction already. Only thing that just bothers me, it's in the crosshair of the politicians, but you can see it's right there on support. It's probably a good time to buy Twitter. For some reason, I've been noticing the stock is getting higher lows. It's just not, they're finding ways to bring it down. It comes down and it finds support. And it looks like it found that support, and it's probably going to bounce up just like here. So yeah, I actually like Twitter, but it does scare me with the politicians because they want to find a way. They want a scapegoat, whatever, for the Capitol insurrection or whatever they ever call it, right? They want to blame somebody. So Facebook, Twitter, they want to get somebody and maybe break them up or whatever. I don't know. Facebook has been looking good. It came up. It wasn't looking good until it bounced off support, but it's still kind of just a bounce here, and it just makes me worry. Generally, Facebook likes to trade close to the high when earnings come out, and it's not doing it. Earnings are out on the 27th. That's Sunday. When is the 27th? Is that Wednesday? Tuesday? Wednesday. So hopefully it can get up. I would like to see it higher, around 290 when it reports, but we'll see what happens. Oh, and they're going to kill it, by the way. They are going to kill it, but I don't think investors care anymore. I don't think they care. So I worry about Facebook. It used to be my favorite stock. Still kind of is. Beautiful. The weekly looks beautiful, actually. Looks like it's just ready to explode to that upside. But will it break through the range like Google or just go to the top? Don't know. I like it a lot. I might have to put a trade. I don't know. I don't like trade earnings. I don't know. I like Google, though. That's a good chart. This weekly looks good. But you can see, like, you can see the crossover and the slow to fast moving average right here. It's just, I noticed a lot of the FANG stocks or a lot of the momentum stocks, they came up to this range and they went sideways. Facebook is the only stock that actually started going lower. That's what bothers me. Why? I don't know. Why was it leading its way down? I don't know. But it went lower. It went all the way to 244. I wanted to buy it, but I was scared. It's like, why is it 244? This thing was up as 305. So it was way up here, came down. It's 20%, perfect bear market territory. That's crazy. So everything was ripping, and Facebook went down 20%. That price action bothers me. So I don't know. I remember that time Facebook reported earnings just a few years ago, and it dropped 20% on earnings, which at the time was the biggest drop. In for S&P 500 company on earnings. I think anytime. Vicky, you shared my video? Appreciate that, man. Appreciate lots of love. Lots of love back to you, Vicky. I appreciate you sharing me out. That's cool. Jewelry Box. If you're new, please subscribe, turn on the bell. Thank you, Jewelry Box. Jewelry Box is Deborah. That's my girlfriend. Going to, yeah. All right. So I think I hit up everybody. Thanks for coming in, man. I guess I broke a record with people coming in. I think I seen up to 11 people. So I appreciate you guys coming in. I get on here. I don't know what I'm talking. I'm just a regular dude. Okay. A lot of people is up in here. I'm a truck driver. You could even see my uniform. Yeah. See, doing videos. Oh, it's over here. Doing videos in my uniform shirt. I was actually being slick here, and I was using the mic to cover that. You like that? See that? See? Anyway, so yes, yeah, I drive trucks, work for the post office. So I trade when I'm not doing that, and this is how I try to make my money. So I don't have to drive trucks no more. I would love to do this full time, and I probably can, but I'm afraid. I think if I had to make the money to pay bills, I wouldn't make money at all. But if I can just when I started making the most money trading, when I didn't give a fuck. Truly. And when I was just like, I don't care if I lose it. I don't even care. And I started making money. But when I was trading, even though you shouldn't be like that, don't get me wrong, you shouldn't be like that. But it was the mentality I had. And then when I was like, oh my gosh, basically playing with scared money. By the way, my channel used to be called Trading Scared. I would lose money because I was afraid I didn't want to lose it. And then I would lose it. But when I became like, I don't care, I would make money. So go figure, right? I guess I took the emotions out. And that's what traders, when you look at a stock chart, it's all emotions. You're looking at the chart of emotions. That's why things repeat. That's why you can say, oh, the head and shoulders go down, blah, blah, because people's emotions are always the same. It's nothing to do with the price of the chart. It's emotional, right? So when it breaks support, people's like, oh, those people that bought there, oh, I'm losing money, I got to sell. And it goes down. Right? So it's true emotions. You're learning emotions of people charted in a stock chart, right? So learn that. And that's why patterns work. I used to be a fundamental guy. I used to be like, I used to be looking at all that shit, the PE and P, all that shit. I don't even know it no more. I used to look at that and I wasn't making money because you could be in value stock, right? PE, oh, it's great, great PE, it's low, it's only 15, growth rate's 12. So that is great, but it could stay like that forever. I remember Apple was like that forever. Oh, now it's truly got the, they truly given it a tech PE. Anyway, but I threw it all out the window and I just started trading charts. And oh man, that's when I really started making money. So I look at none of that stuff no more. I just want to see the chart. Just tell me what it's doing and I'll make decisions. I care less if you make money. But see, it's a different kind of style. I got a lot of different style of investments going on. I got stocks I just want to hold forever. I got trades on, so blah, blah. Stocks that I want to hold forever. I do want you to make money, by the way. I want you to make money. Don't buy stocks that don't make money. Buy stocks that are making money. Anyway, but like here, this is a perfect bull flag, right? Everything tells me this thing is just going to blow through. Okay, what is this? I'm looking at Facebook. So I just told you about Facebook, how I was feeling, but now that I'm looking at the monthly, oh, it's going to blow through. This looks like this pole right here should duplicate. I'll draw it right now. So yeah, it should, man, looking at this, Facebook will be over $400 if I'm just playing the chart. That's it, nothing else, or no, whatever. But see, the one thing that can stop it is the government. That's why it's trading low. But if the government were to take a chill pill, Facebook's $400, man. And it still may get there with the government in its face or not, So I like that chart. I like that a lot. Let's see. You heard it first right here on Dre Trades. Facebook, $400. Why did I pick 400, by the way? Because it's right there at the end of the stick, and it's a nice round number. Stocks like round numbers. They just do, right? So those they're automatic resistance point. Oh, I'm glad you're learning, Vicky. OB10. You're good enough to trade full time. Oh, thanks, man. I appreciate you. I used to show my numbers, but I don't now. I could tell you this. I could tell you a bunch of stories. Well, not a bunch, a couple stories. I do still like to hit home runs, man. And that's my weakness. Like, I'll go for a home run. I'm going for a couple now. I'll tell you what they are. I'm going for booking. You know, I'm hoping that breaks, man. I think when that breaks, and I always get in too early. I got a problem with that too. I like to get in before the break, but I know this is double top action. It pulls down. Why did I don't know. But I'm on. I just do. Anyway, when this breaks, I think that goes a lot higher. But it's a double top action here, right? So, I mean, to tell you the truth, it might come down it might come down to this range right here, but I'm in it, right? I'm in the calls. I'm trying to get a home run. See, that's what I'm saying. So, what other stock that? ISRG, Intuitive Surgical. It's a little toppy. It's having a bad week. So look at that. Oh gosh, makes me want to get out by looking at that right now. I mean, they reported earnings came down 6.8%. The weird thing is they pre-reported and it went up. Okay, so we knew about the earnings here. They reported, it goes to here. Go figure. Anyway, but robotics. It's all, these guys are the leaders, okay, of their field. This stock to me is going much higher. I don't know why it is like that. We're at the end of the month. Look, volume is even kind of low on here. So I'm not really concerned. I'll tell you what, if it breaks that candle, if we get an outside candle right here, I'm gonna draw it. Matter of fact, I'm gonna set me an alert. I might have to bail. Sell, create alert. And what is that? Is that the 7? Is that 740? Hold on. That candle low is 721. Okay, so create alert. I'm going to put, all right, 723, close enough. Look to sell out of ISRG. Outside candle. All right, so I'll probably maybe stay until there. It's in a lot of support right here. It should really bounce. I'm really surprised it printed a candle like that. It still had good earnings going into with COVID. If you come here and let me show you something. Look, got me doing my little homework. So my home run plays, I'm striking out, and you can't be striking out too much on a home run when you're trying to go for home runs. So, but then I still do my credit spreads for my core, and yeah, look at that. Damn, but that's earnings. Come over here. Can y'all see that? Let's look at the quarterly. You can see the quarterly. Look at the revenue. Look at the growth. Look at the income, the earnings. I mean, it's really, so you look at the annual, look at the money these guys is making. The revenue and the earnings. This is a COVID year. All right. And it really, remember, a lot of the hospitals, they didn't have time to do elective surgeries and things like that, and using the break rooms for hospital beds and stuff. And they didn't knock it out the park. I mean, but they still made a lot of money. I mean, nobody made money in 2020. So, but take out 2020, you can see the earnings potential. Look at that. So I'm in the Intuitive Surgical. It says, why just drop? Look at the Motley Fool. A little over a week after the pre-announcing sales for Q4, which sent the stock up. Robotic surgery, Intuitive Surgical releases full earnings, which sent the stock down. Okay. Why? All right. You went up on the pre-release, you go down when it comes out. All right. So whatever. I don't know. It is what it is. Facebook is losing users, man, but it's not, they focused on that. Facebook is it's still the best place to go for ad sales. I mean, as long as that stays intact, who cares? Like they got 3 was it 2 billion users or whatever? I'm just throwing a number out there. Don't kill me if I'm wrong. Well, let's say they had 1.5 billion users. Well, even 1 billion, as long as you still got the 8 million advertisers that's come and dropping in all those money, doesn't even matter. That's how I look at it. Because they're getting it in front of all of those people's face. That's what we want to see. When that ad sales starts to come down, see, basically, I believe Facebook has reached a point of users. They already saturated the world. When it comes down to the ad sales peeling off, and we already saw the ad apocalypse with Coke and Disney and whatever. I did a whole video on that. I did a blog post on that. It doesn't even matter. When's the last time you've seen a Coca-Cola ad on your Facebook feed? Because it's not about that. It's about small business for the most part. And when those guys peel off and start going elsewhere, by the way, where else are you going to go? Where are you going to go? Then we have something to worry about. So that's what I feel. And or the government just saying, that's it. It's over. Or they do that whole 230, the section 230, making you the publisher and causing, just changing the game of way Facebook operates. Also with the new iPhone, Facebook, how they're gonna keep their privacy, right? You have to allow your privacy to be tracked. But here's the deal with that. Okay, so you can't really precision advertise, but you can still advertise. Because bottom line, there's still not a lot of places to go where your ad's going to be seen and without paying a fortune, especially for small business. You can't get a TV ad. It's going to cost you a fortune. Or a billboard that nobody's going to see because everybody's looking at their phones when they're driving down the road these days, right? So it's still the place to go. Until it's not the place to go, I just feel that Facebook is always going to make the money. And so keep an eye on the advertisers. When that starts to peel off in their earnings, then Facebook, I think it could be a trend and it could be done. But we saw Apocalypse. Apocalypse didn't even peel it off. And that's when people was actively boycotting Facebook. Right? So they was actively boycotting Facebook. And then the earnings came out and Facebook reached an all-time high because people realized it didn't even matter. Remember, when I don't put my ad in, remember, Facebook is auction style ads. When I don't put my ad in, there's somebody else that's going to win the auction for the same price. Right? So that's why you could peel back. There's only so many ads that they can show on Facebook because they're trying to make it entertaining site. They're not trying to blow your feet up with ads. So you take all the advertisers and so many ad space and everybody competing for that ad space. If you pull out a few people, you're still going to sell the spot, so that's how it works. That's what people don't understand. And that's why Facebook keeps knocking it out the park, no matter what happens. And there's not a lot of other places to go. There's just not alternatives anymore. Right? All eyes online, right? Everybody's buying the iPhone 12, right? Apple's going crazy. iPhone 12, iPad, iMac, Galaxy phones, whatever. Everything is online. Facebook is truly the only place to go other than Google, but it's the same thing there. So that's how I look at it. Where are you going to go? All right. So, hi guys. You said, I know guys not as half good making $1 million a year from 12 Discord members. You know what? Because I don't have a Discord. I ain't never even been in a Discord group. But a lot of people that I notice, they fake it. And then they really do good from their YouTube channel, which if you do pretty good on here, you'll make maybe 300,000 in ads on YouTube. And you don't have to even trade anymore. You just buy stocks like AT&T. You know what I mean? So you could just fake it, you know what I mean? And talk about trading, but you're not really doing it yourself. Or you're doing it, but you don't really care about that because you're bringing in a shitload of money with other things. So you're not really trading hard. If that makes any sense. So, I used to be in photography. I do photography. I'm not as much as anymore. And my my last channels, Dre Trades. I changed it from EMIP TV, which is Envy Me Images Photography. I followed damn near every photographer on YouTube. I learned everything I needed to know about photography on YouTube or online. And I was good at it. My website, I think it just came down. Anyway, that's another story. But there's hundreds of videos, and I had like, what was that? I don't know, 20,000 subscribers. Anyway, so what was that? Oh, so basically the photographers I followed, they didn't even do photography. They sitting there showing you how to take a picture, but their photography sucked. It sucked. They was faking it. Anyway, so I can see people being on here. You just fake it, man. You just get on here and you're making some good YouTube money and other opportunities that come up, and you just say place a trade here, place a trade there, whatever. So that's it. I'll show you all my trades right now. There it is. Walmart. Oh, you ain't even got it on. Here it is. Got my credit spread in Walmart I was talking about. Shoot. Boeing, Nvidia, big call spread in the 2-year ones, the 840, 860, the farthest you can go out, 40, 5-point wides, 40 of them. SPX credit spread, the lithium I was telling you about. NEO, I got some calls in NEO and spreads. Apple, GM, I just got straight calls in GM. And IBB, a couple of calls in the IBB. I think the IBB is hot. So yeah, so I just showed you what I got going on in this portfolio. By the way, we look at the IBB. I think it's the play. Look at that breakout, a multi-year breakout. Can I just shrink my chart down? And I think it's going a lot, much, whatever word you want to use, higher. So I like the IBB. You said they use options, basic calls, puts in real time, making some really great calls, and members making good money. You're better. Oh, really? Well, thank you, OB10. So you must have been following me for a while then. You just been quiet. Because yeah, if you go back, my videos are there. And I'll go back and I'll rub it in. I'm like, man, I told you about this Ford right here. I told you, look at the circle. I told you the breakout. Anyway, so I get in early on a lot of the trades and kind of let people know. But I was really excited about this because I know some of the people that follow me, they don't have a lot of money, right? So Ford is the perfect stock when I was pushing it at 850, saying, hey, man, you get in 100 shares, $850, get 100 shares, and then you could sell calls against it. By the way, I lost 100 of my shares because I sold the stupid 10, and now it's trading at 1152. So I didn't expect this kind of spike, this kind of action, but I'm going to lose 100 shares. I had 300, and I was selling puts for a bit more. So I had like 300 shares, and I might have had 2 or 3 puts being sold for kind of like the total of maybe around $600 worth. And I was collecting that put money, and I did a video on it, but I don't think people was interested in it. But everybody's interested in it now. But that's one trade. There's a whole bunch. Just got to go back. It's been pointing them out. But thanks, OB1. I always think Obi-Wan Kenobi, but Obi-Wan. Thank you, man. I appreciate that. You said not a fake. They just simply call out their trades daily. I don't get. Okay, I know guys 9 times good making millions of. Sounds good, making $1 million a year from 12. Okay, so how do you make the money from the Discord members? They pay in to be in the Discord. Not a fake. They just simply make calls, trades. Okay. Anyway, but that's what I learned about photography. A lot of people teach. Well, I won't say a lot of people. Some of the people I follow in photography teach in photography, but their pictures sucked. Don't take a picture because you suck. You know what I mean? But and things like that. So, and then some of the people that I don't really follow too many people with stocks because I don't know. I got to keep my own flavor, if you know what I mean. I try not to follow too many people. But I'll listen. I'm always listening to something finance. I like learning more about, I don't know. I just like finance. I like finance. My favorite thing to do is listen to CNBC. I listen on the podcast, the radio, the app. So, or Bloomberg, or anything. Just listen. And that's my favorite thing to do. And then if that's not popping, anything, I might pull up somebody's video and see what they got to say. Oh my gosh. All right, man. I got to go to bed. Viewership's going down. I appreciate everybody else in here. 7:34. I got to be at work at midnight. I got to wake up about 11. So 7:30, 8:30, 9:30. I'm going to get 3 hours of sleep. Just got off not too long ago. All right. So thanks for watching, y'all. And this is why I might miss it. I'd just be tired, man. I'd be like, I got to go to bed. I won't even watch the stock market. I'll sit there and watch movies and with my phone, just kind of see how the portfolios are doing. You said, yes, 100. What? They make $125 a month to be in a Discord room. They can make that a day. In a Discord room, they can make that a day. Well, they could tell them to come over here. I'll give them some free trades. By the way, I don't day trade. By the way, my trades are long term. Like we just got done talking about IBB, right? I'm not, I'm not saying get in today, you can make money tomorrow. As you can see, this is the monthly, and I only look at weeklies and monthlies for the most part. This is a long-term trend about to happen. It's like what we have here. This is why I got this line drawn. I believe that we're starting something that's going to be a multi-year run. So, hey, I'm not necessarily a call buy. You can buy calls, buy whatever. Just make sure it's leaps. Buy way out. Don't buy that short-term stuff. And just sit back and relax and make the money. You don't have to worry about the day-to-day, do credit spread, verticals. Like you can come out here and go to here. Let's look at here. Even though I just got straight calls because I think it's just going to run. You could buy this 165 and sell the 165. How about we sell the 230? It's a big, nice, wide spread. And that's for only 18. That's still expensive. I'm trying to make it cheap. Anyway, how about we sell the 200? Damn, that's even expensive. Damn. God damn. It can't be that expensive. Maybe because the market's not because selling the 200 for 1,000 for 1,100. Yeah, that should be about $700. This is not pricing right. Yeah, I got to do this trade when the market's open for the most part. But anyway, you could do a spread, just sit on it, and double. You almost make 2 times your money. So that's how I kind of trade. Slow trades, options. I'll do credit spreads on the SPX. Wow, look how extended that is. Selling under here and just kind of 30 days out or whatever. Trades like that. And then I have my long-term trades. And then I have my home run trades like we was talking about booking and intuitive surgical. AMD, by the way, I'm in a nice position with that. And you can see we getting ready to break out, by the way. This is this is a trade you can make tomorrow. Okay? Because it's coming into the averages. Send this to the Discord room, OB10, because it's coming to the averages. When they report, I expect this thing to blow because it needs a catalyst. Here's a catalyst right around the corner. This thing pops. That's why I got these circles. Every time it hits these averages, it's up, sideways, up, sideways, up, sideways, up, sideways, right into the average. Catalyst is right around the corner. So therefore, I expect it to go up. Intel has had a shitty ass. AMD's got to be eating Intel's lunch. Intel's got to outsource chips. They don't even have the technology to stay on top. They don't think they're gonna get it till 2023 or something. Intel is this crazy for a company that had it all. Intel Inside. Remember that they could just sell a computer for twice the amount just because it had an Intel chip in it. Anyway, but Intel's just garbage now. So AMD, NVIDIA, Got it. By the way, NVIDIA, you got to like the chips. And NVIDIA is another one. So look at that sideways into, you got the slow moving average, the fast moving average, the price. Everything is right there jumbled up. If I had Bollinger Bands on right now, it would be squeezed right here. So huge volatility squeeze, slow stochastic about to turn to the upside. Volume is even in. It's waiting for the next move. NVIDIA is going to explode. All right. So I'm telling you that right now. Not even a long-term trade. It's just going to explode. NVIDIA and AMD. You heard it here first on Dre Trades. Anyway, good night, Dub Link Mixtape. Man, I got to go to bed as well. You said if you turn your trading into a business, you don't have to drive. You'll do well too in day trade. Same principle, different time frame. I hear you, man. I hear you. It's this way. I used to date. Well, I'm going to say I used to. I put it this way. On my short-term trades like that, I would lose. And then I started making money when I just was way out. When I just set and forget it. You pull up the monthly like this. How could you? Well, this is a bad example. Let's pull up Walmart because it's going straight up. Let's pull up Walmart, a stock that's not necessarily going straight up. How could you lose, man? A couple of months, a couple of years from now, the thing is going to be up. So let's just let's get into the options and really pump those deltas up and make some money. That's how I look at it. But if I buy, say, here for something to be short term, how do I know a dip is not? How do I know a 10% correction is not going to come? Well, if I'm way out here in this time frame, it can come. It can come tomorrow, next week, next month, and I'll still make money. You know what I mean? So it's less stress, and generally stocks, they just go up. You have the 70%. They have 70%. Can't think of the terminology. Stocks go up 70% of the time. For the most part, you're just by being out there, you're going to be right. The chances of you being right are more probable than the chances of you being wrong. But if I'm close to the action on any kind of trade, I don't know when it's going to have a dip. You see the dips, they're all over. I can't time that. But I definitely can say, hey, this thing will be higher than it is going into 2022 than it is right now. You see what I'm saying? So therefore, I make trades like that. And with the leap options, with the premium, oh man, you can make a killing. You just got to be patient. You know, so that's my trading strategy. And it works. It works great. I got the portfolio to prove it, you know. So and that's my style. And that's the one thing about trading is that you probably already know this, Obi-Wan. You got to find what works for you. There is so many different ways and styles to trade options, stocks, short, long, trading off the 1 minute, the 2 minute, the 5 minute, the hour, the 4 hour, the weekly, the daily, the monthly, the yearly. You know what I mean? So there's so many different ways to trade, different styles that you just got to find out. You got to find what works for you because every trade has its own little personality, right? So find what works with your personality and stick with it. You know what I mean? And that's how you're going to make the money. If you try to trade like this person or change your style, trade this person, it won't work. You got to find out what works for you. And this is why people can sell courses, do whatever they want to do. And some people, they still can't make money. They still can't trade because they're trying to learn something from a style that that works for that person, but you really have to tailor it somehow where it works for you in your lifestyle, in your personality, in your emotions. Remember, stock charts is all about emotions. So that's very important. All right. So anyway, when you find that, you just got to stick with it and don't change it and just make that money, pull that money out the market. You know, so that's my style. I found it. Took me years to find it. I found it. I stick with it, and it works. And every once in a while, I throw some crowd. Try this, try that. And you do it for fun, right? If I sat here and did robotic stuff, I'm only trading this and that, and I'm not. And I keep, man, it'll be boring. And you know, you just want to get in some action. Oh, look at this! I think it's gonna pop right here. Let me go ahead and buy this weekly, even though I don't really do that. Buy this weekly call real quick, see if I can make a quick buck. You know, I do trades like that. I'm not saying a weekly call, but I'll do something where I'm trying to make a quick buck just for fun or whatever. And then the buck winds up, I lost a quick $2. I'm like, oh shit, why did I even do that? But you know what I'm trying to say. But I appreciate your I appreciate that the confidence you had in me, man. That's great. I really do. Um, and I'll keep it in mind. I keep it in mind because I definitely want to be able to do this. I'd rather just wake up at 6, get my chair, listen to the market, see what's popping, than getting dressed, putting on a uniform and doing all that. All right, so thanks for watching, everybody. I'm gonna end. This is the longest video I've done. Everyone watching with me, it's a record. A record 2 hours and 30 minutes for the most part. That's crazy. But I love it, man. The time went by like that. Didn't even, especially when you guys comment, I can go on and on. I'm only going because I got to go to work in damn midnight. So I'm gonna catch get a nap in. That's it. A nap, not even a sleep, a nap now. All right. So thanks for watching.